The Fed pauses rates. But what did Chair Powell say afterwards? It's the key to the rest of the year and almost all of 2024, and that is next. Yes, you got that right. We are here to go over what has been said and what has been done by the Fed today. It is absolutely directly affecting the housing market and will affect interest rates. And what they said going forward is kind of crazy. We're going to go and look at the numbers really closely with the Kobesi letter today, as well as see what other media outlets are saying. All today on Real Estate Daily. Welcome everyone. My name is Troy, and every day we go over the latest news in real estate, housing, and the mortgage markets. Now, before we jump in, do me a favor, hit that subscribe button. I really would appreciate it. Helps me grow this channel. I'm going to give you the best 5 to 10 minutes in real estate on a daily basis. Now, let's go jump into this. Here is a Kobesi letter. Now, like I said at my intro, that the Fed paused the rate hikes. Now, I don't like to use the word pause. I want to say they stopped the rate hikes. But before I use that word versus pause, let's go look at the numbers. Summary of the Fed's decision 2023. This is the Kobesi letter. Guys, if you're on X, which is formerly Twitter, you need to follow these guys because they know what they're talking about. They look at real numbers. They're not looking at skewed numbers. They're not looking at manipulated numbers. They're looking at real numbers. Let's go over it. Fed pauses rate hikes, leaving rates unchanged. That was expected. Okay. 12 Fed officials see one more rate hike. Interesting. 7 Fed officials see no more rate hikes. Very interesting. So that number's kind of changed. It was a lot more a couple months ago that wanted to see we're going to see another rate hike, but now we're seeing a lot less. Now, for me, this doesn't even make any sense. We have 400 people at the Fed that's not even a government entity that's making millions of dollars in salary, and they can't figure it out. Yet they're not addressing the debt in the United States going over $1 trillion. They're not addressing what the administration's done is crush the pipeline, and now we're buying foreign oil that's going through the roof, that's causing inflation. Now, remember, fuel and oil don't just affect that category. It affects food. It affects everything we do. And it's all going to go up because of bad decisions made by Washington, D.C. So this, to me, is a demolition of the U.S. economy, and there's no question. The Fed should not be raising rates. Let's go over what happened in China. What did China do? Oh, they lowered their rates. Okay, what's happening in Europe? They're lowering their rates. But here at home, we're just going to go grind you into homelessness. That's exactly what I'm seeing here. I know I'm being a little over dramatic. Yeah, leave in the comments below if you think I am. But all I'm hearing is more and more people saying they're in bigger and bigger trouble, and there's nothing in sight that the Fed is doing to help the situation. Now, they only care about bringing inflation down. Well, guys, I hate to say it, year over year over year, you have gotten inflation up about 12 to 15%. That's it with your poor numbers, your numbers that you keep manipulating. We're really 15, 20, 25%. And anyone that knows it, our fuel has went up over 100%. Our food's going up over 100%. Everything seems to have at least gone up 50 to 100%. You can't tell me that we're only going up, we're inching up 2 or 3% here and there. We all know that's a bullshit lie. But let's go read on. Fed sees rates higher for longer. Fed sees inflation at 2.6% in 2024. Let me put that in perspective, guys. The inflation that the Fed Chair Powell has continued to say he needs it down to 2%. It's never going to be 2%. He is going to make half the United States unemployed, and the other half that's employed is going to be employed by the government, who is spending money and printing money they don't have to control that part of the population. That's exactly what's been happening. Why isn't unemployment much higher? If unemployment was higher, people would be spending less. But unemployment's not higher because the number one employer in the United States over the last 2 years has been the U.S. government. And why? Why are we continually employing what IRS agents to attack us? You know, all these green initiatives that are out there that are really doing nothing. The environment has not changed, doesn't show any change for the future as well. I always like when people say, oh, well, wow, look at the climate change. Well, I hate to say it, but in California, we had one of the mildest summers ever. Where's the climate change? Right? All I know is last 2 years, we've had record numbers of fires. Well, who's setting the fires, guys? Let's be very frank. I'm being right to the point here. All right. Is the Fed finally paused finally here? I don't know. I don't think so. I think that they need to have unemployment go higher. And as long as the federal government keeps hiring needless jobs out there, then we're not going to see inflation go down because people have enough money to keep spending on goods. All right. CNBC article, Fed Chairman Powell, here he is right here. I've always thought a soft landing is a plausible outcome. Guys, are you kidding me? You don't even, what earth and planet you're on. We're in a recession. All the numbers that keep coming out on a monthly basis are being readjusted worse, you know, the month after month after month, quarter after quarter in the past, and you're not addressing that. You just keep going, well, the numbers this month, that's not good enough. The numbers in the past are really horrible. It's just being manipulated at the time they say them, and then it's being readjusted, and the media doesn't go out and say it because we all know that the media lies. If you really want the real news, go on Twitter, go on X. That's where there's free speech. Otherwise, there's no free speech out here. It's just manipulated media. All right, Kobesi letter again. What does this do for us, okay, in the housing market? How did the Fed, is the Fed doing for us? Well, let's go read it. Breaking 10-year note rises to 4.37%, the highest since 2007. Rates continue to rise despite the Fed's rate pause expected. What does that mean? Higher interest rates. Even though the Fed pauses, it's higher interest rates because that's what Fed Chairman Powell continues to say. We're not going to see anything happen in 2024. It's going to be 2025 or so before we really see rates go down again. This is ridiculous. The U.S. is issuing a record levels of Treasury bonds to fund the deficit spending. So the government's spending more than it's ever spent before. The last 5 months, it's $1 trillion a month. Why? Because you've hired so many people and you have so many programs going on that it's killing the United States. You're just drowning in debt. And don't tell me you planned to pay it off, because the only two ways to pay it off is default on it, it goes away, and it destroys the entire United States. Or you just turn the printers on, Fed Chair, and just start printing into oblivion. That's going to cause even more inflation. So what are we at? A rock and a hard place. That's exactly what the Kobesi letter is trying to say here. There's so much supply that it's driving bond prices lower and Treasury yields higher. So they're putting out so many bonds to pay for the debt. They don't want to show it on that debtometer that they have, which just passed $33 trillion. They'd rather keep printing bonds into oblivion. And when people stop buying bonds, and it's going to happen here, when people realize that the money, that cash, fiat in the United States is becoming more and more worthless, they're going to stop buying bonds and go into other asset classes. That's the beginning of the collapse. And I don't think, guys, that we're looking at anything short of the next 12 months. All right, between this quarter and next, 1.9 trillion in U.S. Treasury bonds will be issued. Think about that. In the next 3 months, we're going to have what? 2 trillion being printed because of bonds, because they can't, because their budget is $1 trillion a month and they're over budget by at least $2 trillion. Wow. Give your 22-year-old a credit card with unlimited spending. What are they going to do? Yeah, that's called the U.S. government. We're paying for deficit spending in many ways. Higher interest rates are one of them. Interesting. All right, let's jump into the Orange County Register. Fed offers no relief for the housing market. Of course it doesn't. It has to destroy every single industry, and it's going to destroy this one. The problem is, if you destroy the housing market, then you're making big companies, hedge funds, they're going to become owners of homes. And when they become owners of homes, they're going to manipulate the rental prices, because the higher the rents, the better they have for their shareholders. And that's exactly what's been happening. We're seeing more and more of the United States being bought up by hedge funds. And that's exactly what the Fed wants to happen. That's exactly what the DC bureaucrats want to happen. The more they control you, the better it is. The housing market's one thing, right? But when we are short 5 million homes in the United States, and we're not subsidizing it, but we're subsidizing for WAR in Europe, we're subsidizing for social agendas, we're subsidizing for teaching transgender in schools all across the United States, but we don't care about housing. We don't care when you go home. We don't care if you live in a slum. We don't care if you have no way out of it. All we care about is putting our narrative in front of you. That's what I see here. That's what we're screaming and yelling at. We need a change in this country. I'm not here to stand up. I don't want to become less political, but it's becoming so obvious what is happening out there that you start to look at all politics. And believe me, both sides of the aisle are a bunch of douchebags, okay? I will tell you, there is no doubt that some of the Republicans, especially the older ones, have no clue what they're mindless. I mean, come on. I'm looking at some of these people up there. You have to have term limits, and you have to stop them from putting stock margins in, as they continue to make millions and tens of millions and hundreds of millions of dollars on stock trades on what they vote on, i.e. Nancy Pelosi. Come on, Gary Gensler. All these people are worth over $100 million, and they didn't on a $185,000 salary, $200,000 salary, $300,000 salary. They went from being worth less than $1 million to being a career politician being worth $100 million. Think about that, guys. When you're voting next, that's all they care about is their pocketbooks, and they don't care about you and building and subsidizing more homes in the United States to actually inhale and get that American dream out there and keep you, from being poor all your life, having an asset you can hand down to your kids, right? Your generational wealth right now is in your house. There is no question about that. For most of us, some people have a ton more money in the bank. I get it. But majority of you, by the time you retire, it is your house that you're going to pass down. And what your kids do it is what is going to happen to them and direct what their future and their journey in life is going to be. All right, let's jump into mortgage rates here. 30-year conforming went up slightly. So did FHA, went over 7%. There's just no relief in sight here. If you're out there looking for a home, it might, when the Fed pauses, it's, or even does that first rate cut, it's going to be game on as interest rates are going to fall, and there's going to be so many buyers in the market. I've said it now. I'd rather pay a high interest rate and a lower price on my home than a lower interest rate and a higher price on my home. I can always adjust the interest rate on my property through refinancing, but I cannot change the price I bought the home for. Get that through your heads, people. It is, if you're going to buy a home, don't go batten down the hatches now. You're not going to go get it. You want to get out there, buy a house and not compete versus get out there and compete against 20 offers. Anyone in the last market that did that, a lot of you people are now going to be habitual renters because you let the market pass you, and home prices continue to go up. There's just no inventory out there. So again, I jumped in my soapbox. I don't like politics whatsoever. It keeps playing a major part in all of our lives and our budgets. And so I'm hoping that they actually see what is happening and the Fed pivots and starts to go down, because once they do that, we're going to see the housing market really take off. But until then, it's going to be in flux. It's going to go up 5%, down 5%, up 5%, down 5%, up 5%, down 5%. And anyone out there looking at foreclosures, and I went over this week, okay? Foreclosures, the government wants votes. How do you get votes? You keep people in their homes, even if they don't make payments, and they use a term called forbearance. Forbearance means, oh, well, you couldn't make a payment for the last 6 months. That's okay. Don't worry about it. We're going to put those payments at the back end of your 30-year mortgage loan. So you just missed 6 payments. No big deal. You missed 12 payments. No big deal. We're gonna pile that back on. We just want you to vote for us. You guys take care. I will talk to you mañana.